Good morning, everyone. It is now 9:19 the time. Congratulations again to Sandra Jones from Roanoke Park, California. Right
She was a
outside
good sport.
Santa Rosa. She was a good sport.
Yeah.
We had to give her a few clues, but that doesn't matter.
It's okay.
She won a book.
It's Christmas.
A good book, exactly. It's Christmas time, so she has another present coming in the mail. Okay, so a lot of us travel, dine, maybe go see a play, give bottles of wine to clients of ours, whatever it might be. And in many cases, those very things are eligible for write-offs when you do your taxes next year. All depends on how you do it, what you're doing, what percentage you want to write off, you know, all that sort of thing. But just because you might have enjoyed whatever it was you were doing, it might still be work-related.
Right.
You know, in which case you can get a little extra money back with your tax return, you know, or make the sting a little bit worse if you're paying. And so, you know, it all depends on, you know, how much you take out each check, that sort of thing. So we thought, since those are all Eat, Drink, Explore related, why not have a representative from the IRS on to talk about this so that people can get a good idea.
The true expert.
The true expert. Rafael Tolino is with the IRS down in San Diego and joins us on the line right now to talk about some of these write-offs people may shy away from taking because they probably think, well, I was out to dinner. I can't possibly write that off, you know. So welcome to the program, Rafael.
Hi, Randall. Thanks for calling me an expert. Half expert, but...
I was telling everyone earlier that you were a joy to talk to on the phone, and I said, I guess in a position like yours, you sort of have to be in a good mood all the time because for the most part, people find out you work for the IRS, and what's their first reaction?
Oh, man, it ranges. I've got, you know, I've been doing this for a long time, and you get the whole gamut of emotions, people looking at you with a blank face, some immediately think you're from another planet.
Or they run away.
Others will just kind of immediately probably not think you're a good person, that kind of thing. But,
or they switch up their name, like you can tell they're lying. You know, that's not my name, and I don't live in this house behind me.
You certainly develop your own Rolodex of good humor and to make it more fun. But certainly, it's not the norm profession when you're a public affairs person or communications guy for the Internal Revenue Service, but I'm very fortunate to have my job.
Well, you're all over the news down in San Diego, so anyone that might be watching us online in that area has probably seen a clip of you. I imagine you're in high demand come April when news organizations want some last-minute tax tips for people, but we thought since it's the end of the year and people might be compiling their stuff right now and they have a fresh memory of some of the things that they did over the past year, that now would be a good time to talk with you. And the IRS has a publication directly related to everything that our show talks about. It's publication 463. What do people find there in Pub 463?
It's the travel expense pub, and basically what this information gives you is exactly what you were mentioning in terms of travel, entertainment, gift, and car expenses, and what you can put on a tax return, and all the different rules involved in terms of being able to deduct these expenses, assuming they are ordinary and necessary in carrying on your trade or business. And those two buzzwords, of course, a lot of folks who may be involved in taxes or doing taxes and that kind of thing understand what those words are in terms of how they work with your business, and that also is determined by what is your facts and circumstances around what you do for a living, and then how you can apply the rules and the expenses and how they fit on your form and where they go and all these different kinds of things depending on what you're doing in order to use them to legitimately reduce your tax bill, which you should do. I mean, you shouldn't pay any more tax than you owe, no more, no less. And by all means, if you're able to take advantage of these expenses and deduct them, then by all means you should do so. And just real quick on IRS publication 463, that's 463. You can go to irs.gov and download it and read it. And there's a HTML version, there's the PDF version, and it's very useful. And it's not the only resource that discusses it. It's just kind of the main one. The main one where you want to get that information.
So if you're having your taxes done by a professional, do you just count on them to understand this and sort of initiate the write-offs? Or do you have to say to them, hey, I have this, this, and this, and sort of alert them to what you might write off? Or do you rely on them to guide you?
I would say, well, there's two answers there. One, most tax professionals know their clients, and either you get some kind of questionnaire or a letter from them at some point, let's say in January or February, and then in there are the changes and things that involve you. But if you're running a business and such, and you've got a bookkeeper or you're using software and doing it yourself, chances are you're up to speed, and they know how you run your business, and they understand the rules that apply and can put two and two together to hopefully benefit you as best possible based on what you're doing and what the law says you can do in order to deduct, expenses and such. So it's a relationship you have with the tax professional. And certainly if you're self-employed, perhaps you're doing it yourself, and if that's the case, the software will hold your hand all the way through when you file returns. Your software is so, what's the word I'm looking at, so convenient and so easy, as long as you have the information in front of you and follow along when you actually do the return. When it comes to tax planning, of course, a lot of folks go throughout the year and do that, and that's where chances are your tax professional understands your business, understands you, knows you, and knows how to put two and two together to make it work for you. So, one other thing about that is about 3 out of 5 of all individual returns, about 60%, that number's been steady for the last several years, of all returns are done by tax professionals. So, in other words, you and me, we do it ourselves, but not nearly as much as you and me going to a tax professional and having them prepare the return.
Right.
And the other thing is on that, the key, no matter who prepares a tax return, no matter what is on it, you're the one responsible for what's on it once you sign it. So
I hate that aspect
right.
of it.
It comes back to us.
All right, I have a question. I'm horrible at keeping receipts. I can't keep a receipt to save my life, and even when I know it's an important receipt, I'm putting this in a special place, and then I can't find it.
You don't remember that
so,
place.
I know that if you're doing a ton of travel, and you're at this restaurant and that restaurant and this hotel, blah blah blah, you don't necessarily have to save all those receipts. You can take sort of the IRS
like
sort
a ballpark.
Yeah, the IRS figures most people can eat for this amount. They can stay at a hotel in this part of the country for this amount.
So there are some generalizations.
There's a generalization, and if you just take that as sort of a blanket, that's a little easier, right?
I would refute that in that I think we'd rather make sure the IRS would be to have the actual receipts and expenses, because it depends on where you're going and what you're doing, but it could be disallowed if you don't have something accurate. It depends on where it is, what it is, and what you're doing, but you definitely want to have good records. You want to have your record keeping. You want to have some sort of of way to substantiate certain elements of expense. And so I would say you can keep proof in a book, a diary, a log, a statement, a record of some sort, but somehow you should cull it together so it has the proof that you need in order to substantiate what goes on the return.
That's why I put everything on a card.
Yeah, well, yeah, and I don't want to say I don't want to say to verify what you're saying is no problem. You can be we'll just throw it on there, but do try to get as accurate as possible. That way you can be sure when you're putting information down there, you're getting a legitimate deduction for what you have, and that way the IRS doesn't come back to you and say, this doesn't seem right. Based on this, you put that. Then you could say, well, no, I have my receipt, and that way you have
and then you've got it. Raphael, we have less than a minute left. I just need to quickly know it's Christmas time. A lot of businesses give like wine and stuff like that. A portion of that is write-offable?
Yeah, there are gift expenses that are write-offable. They are kind of de minimis in terms of what that number is, but certainly you can. It's $25, I believe, is the amount that you can actually use for a gift in terms of what goes on the return. And if you're looking to do that, and there's other expenses as well. But certainly that information is in detail in either publication 17 or 463, but the IRS.gov. But whatever you can do to get a hold of that information, I hope you find it.
Raphael Tolino with the IRS down in San Diego, joining us with some of the write-offs that might affect listeners to this show. We certainly appreciate it, and links to the publications he talked about are available at eatdrinkexplore.com under the program summaries. All right, you ready for a new job, Patty? Maybe at one of California's top restaurants? That's coming up next.
Okay.